Okay, question number 1. Can we see the question number 1? Wastobi and Co. As for items of inventory, a count of inventory has established that the amount of inventory currently held at cost are as follows. We have the cost price, we have the selling price, and we have selling cost. Are you with me? Here we have item A1, item A2, we have inventory item C1, and we have inventory item C1. Determine the value of closing inventory. Closing inventory to be reported in the financial statement. Are you with me? Now, this is an aspect of normal line of business. You want to report a financial statement. How do you mean to report the financial statement? And how do you mean to recognize your inventory in the financial statement? Part of what we discussed last class says that for inventory to be reported in the financial statement, you either dare to use dare to use what we've called cost, the lower of cost, or net realizable value. How do we come up with net realizable value? That is what we are now meant to do here. Then we can now compare the cost and net realizable value. That is what they are trying to test in this situation. Are you together? Is that clear?
Yes, sir.
Now, let's go to make it more simple, in a simple way, that everybody will be on the same page. You get it? Let's use Excel. I will copy this to Excel. Since we have what this is all about, can now add it as a solution. Okay. Can we see the Excel?
Yes, sir.
Okay. Now, looking at it from this angle, what are we intending of doing to solve the problem? Okay. Now, this is solution to question 1. Solution to question 1. Now, what we're not going to get here is called net realizable value. And the next one we are looking at is value of inventory to be reported in your financial statement. Value of inventory. Okay. Okay. Now, for us to get the net realizable value, you will less selling price minus selling cost. Do you understand what I'm saying? Hello?
Sorry, sir.
Can you see the board? Can you see the
Yes,
board?
sir. Yes, sir. Yes, sir.
Now, what we're not looking at now is for us to get the net realizable value. Net realizable value. The net realizable value you are meant to get, you are meant to less your selling price minus your core selling cost. Selling cost. That is, or they call it selling expense. Selling expense. Now, this will now be 7,800 minus 500. Can you see it? Is that clear?
Yes, sir.
Okay. Then the next one will be 18,000 minus 200. That's 17,800. The next one, 17,000, sorry. 17,000 minus 200. We have 16,800. The next one, 7,500 minus 150. We have 7,350. Now, what does the standard say according to IAS 2? For us to recognize inventory in the financial statement, we are meant to consider cost. The lower of cost or net realizable value. Lower of cost or net realizable value. Are we together? Is that clear?
Yes, sir.
Now, looking at it, value of inventory, you are not meant to compare, and we painted those ones we are comparing now. We are comparing the cost, price, and the net realizable value. The lower of the two will be selected as the amount to be reported in the financial statement. Now, comparing the cost of inventory item 1 and the net realizable value, which one is lower?
Net realizable value.
Net realizable 7,300. That is what we are now meant to use to represent, to report our financial statement for inventory item 1. The second one, we consider which one again? 14,000 for
Yes,
item.
14,000.
Yes, we pick 14,000. That's the lower one. We also go by item P1. We have 16,000 and we have 6,800. We consider 16,000. Then the last one there, we have 7,350 for net realizable value and we have 6,000 for the cost for item C1. Then we consider the lower one, which is 6,000.
6,000.
Then what will now be the total of the inventory? Inventory what? Inventory value. Inventory value mean the total. This is equals to, what is the summation? Don't worry. This is what we are meant to have in our financial statements. Any question?
Is that the final answer, sir?
That's all.
Okay. Hello, sir.
So we have answered the question like that.
That's all.
Hello.
Okay, sir.
That is the first phase of the question. Abi?
Hello.
Let's look at question number 2. Hello.
Okay. So
Okay.
So now it appears that it's very, very simple. So now in an exam situation, are there other ways by which they can put the question that will make it confusing?
Well, this is just only question 1. There are other questions that are technical. This is just the simple part of the question.
I mean that question on
this part. Yes.
Part, yes.
What you are meant to compare is you compare the cost and the net realizable value. The lower of the two is what you are going to use to report your financial, to report your inventory in the financial statement. That's all. We did this on that when we were doing audit training. Countless of this one, we did it. They will give us the list of securities of a company. In the process of giving us, they will tell us to value it. For us to value, we use the lower of cost. So when we also look at what stock taking of an organization, we ask them what is their cost. They give us their cost. They give us their net realizable value. For most company that doesn't have what inventory valuation. The next one we are looking at now is inventory valuation. Now let me take this opportunity to also discuss with you what we called documentation under the inventory. I don't think I made mention of that in the last class. Inventory documentation. Inventory documentation. Now, in the process of putting in place your inventory, there are documents to be considered. What are these documents? The first one is the procedure you are meant to use to order for your inventory at the first instance. At the first instance. Now, when you look at it from that direction, we have what we call letter of inquiry. What did I call it? Letter of inquiry. That is a letter to be sent to the supplier, stating or asking or requesting for the kind of service or product such organization are into and their prices. In response to that, they will send letter of quotation. In response to letter of inquiry, the supplier will send letter of quotation, giving the details of what the company is into and the prices of those goods or services they are into. After that, the organization that sent letter of inquiry will forward to the supplier letter of what? LPO, letter of, local purchase order. If it is within the within the country, they will forward to the supplier what we call LPO, local purchase order. If it is international supplier they are sending that to, they will forward to that organization what we call indent, letter of indent. It's the same thing, but for the international they call it letter of indent. While at the local level they call it local purchase order. Local purchase order give the details of the goods to be purchased by an organization. The details, the quantity the organization is intending of buying. After that letter of what? Letter of local purchase order, then the organization will organize the supplier will organize the goods together with 2 documents or 3. Let's call it 3 documents. The first one, they will issue the invoice. The second one, they will go along with delivery notes. Aside delivery notes, they will also go along with what we call way bill. The invoice is going to give them the details of the goods and the value or the cost of the goods they are meant to pay in line with VAT and withholding tax if it is service. VAT and withholding tax. After getting the invoice, the delivery note will only give them the quantity they have delivered and the condition of the goods. After getting those things, they will deliver the goods with the documents to the organization. The organization will receive the document and confirm the goods. After the proper inspection, they will fill in what we call good received note. Good received note. The good received note is telling us the amount of the goods they have received and the condition of the goods, whether goods or bad. The store person will now receive the goods. We put all those items inside what we called bin card. Bin card is a document. Bin card is a document. Bin card is a document being managed by the storekeeper in order to monitor, the quantity, in order to monitor the quantity received, and also to monitor the quantity issued out. Bin card is meant to be managed by the storekeeper for the purpose of monitoring the movement of the inventory or goods or stock. How does this particular bin card look like? Which is what I'm going to design now. I'm not going to give you the one I've designed before. I will design it now. You can see the way it looks like. Is that clear?
Yes, sir.
Okay. We have what we call the order level. Apart from the order level, we have maximum, inventory level, we also have what we call minimum, inventory level, then we have economic order quantity. Now, we will now have what we call date. We have receipts. At times, some put what we call description. Description. We also have what we call receipt. At times, if it is in a big organization, they can put in place what they call department. We have what we call receipt. This receipt, we take 3 positions, 1, 2, 3. We match it together. The next one is issued. Issued. This one we also take 3 positions. And we have balance. And here we have quantity, the second one we have price, next one we have what we call value, or you see it as an amount, depending on what the organization is taking. Copy it and put it in the order. This is how it looks like. Is that clear? Hello? Hello?
Yes. Yes, sir.
This is how being cast look like. It's not all the organization that always puts the reorder level, maximum stock level, minimum stock level, or EOQ on it. Some don't put it on, just put this one straight away. No problem. It's just for us to monitor what is the quantity you have ordered for, your maximum stock level, your minimum stock level, and your economic order quantity. Any question before we move forward? Any question? Absence of no question. Do we understand?
Yes, sir. Yes, sir.
Okay. Any question?
None for now, sir.
Absent of no question. The next document is also called stock ledger. Stock ledger. Stock ledger is the same thing as being card, but stock ledger is managed by account officer. At any point in time, the stock ledger must be the same thing, must have the same value of inventory with the being card. In this situation, for anything to be moved or to be issued out from the store, are you with me? Then there must be a requisition. We have what we call purchase requisition. That is what we also call material requisition. If production unit is in need of material or department is in need of a particular product, we use what we call departmental requisition or purchase requisition if it is production unit. I mean, they use what we call material requisition. But if procurement departments want to buy something, they will use what we call purchase requisition. Just to tell the organization what they need. These are the documents required as the organization is concerned. Now, looking at it in that direction, they can ask you to prepare anything under this particular topic we are treating, using bank card, using store ledger, using different words, stock valuation. It could be first in, first out. It could be weighted average. It could be last in, first out. It could be simple average. But as International Accounting Standard 2 is concerned, first in, first out and weighted average are the two methods recognized as that particular IAS is concerned. They recognize just only two methods. Or not before that particular International Financial Reporting Standard came on board, then they were using about 5 methods or 6. We have what we call first in, first out. We have what we call last in, first out. We have what we call weighted average method. We have what we call base stock method. We have what we call replacement pricing method. There is what we call standard pricing method. Any question, please? Any question?
Hello?
Hello?
Okay now. Okay. So are we going to also treat LIFO?
If we have questions relating to that, I will touch that for you to have idea of how it was being used before now, and the advantages and disadvantages that are involved.
Okay, sir. So okay. The reason I asked is that I know that in financial accounting, only LIFO, FIFO, and weighted average price method are tested. But in MI, based on the syllabus, I learned that FIFO, LIFO, and the other one will be tested. And then based on what I've seen in Pathfinder, I've seen questions on LIFO. So that's why I'm asked.
What year? The LIFO question was in what year?
Okay, I will give the details before the end of this class, sir.
Okay. Because the last time they test LIFO should be around 2017. It has not been tested again because it's out of the standard. Okay, let's go. Let's look at question number 2. We'll discuss one. Let's look at what question number 2 says. Now, let's look at question number 2.
Sir,
question number 2 here.
Sorry, I'm sorry to interrupt, sir. So now, from what I'm seeing there, it was tested in 2021, May 2021, LIFO.
LIFO, May 2021. LIFO. I doubt that. Please check it very well.
I'm sure, sir. May 2021.
That one should not be issued from my own end here. So some
Okay.
it is not the problem, but
Okay,
it
sir.
has been long. Even in 2016, there is a question here tested by ICANN in 2016. They only tested FIFO and weighted. How they now come up with what? LIFO in 2021. There is an issue somewhere.
Okay.
Because as at that time, the standard says that LIFO is not what applicable to report anything as business is concerned.
Okay.
And, now let's look at question number 2, which has to do with what? FIFO, LIFO, LIFO, weighted average, and simple average. I will treat all this night. I cannot give you assignment on the remaining part that you can go and work on them on your own. Do you get it?
Yes,
Look at
sir.
question.
Yes, sir.
Okay, look at question number 1. I mean question number 2. And look at question number 3. Are you with me? One is more technical than the other. I don't know whether you can see them. Go through can you see it?
You can see number 3.
You can see number 3, Abi? Because number 3 says we should do what again? Require statement of profit or loss using FIFO, using simple average method, using weighted average method. That's one. Then when you look at this one alone, this one only requests for you to determine your closing inventory value using FIFO, using LIFO, using simple average, using weighted average. Is it clear? Hello?
Yes, sir.
Out of the 2, which one do you want me to treat?
We are still going to treat the 2.
Why must we treat? Which one do you now want to take home as an assignment?
Start with the first one, and then also give us clue on how to
Go about
do the third one, like making statement of profit and loss. But first of all, treat the second one, sir.
We should treat the second one.
Question number 2. I mean, question number 2. I mean.
Okay. Question number 2. Okay. No problem.
Why not 3? Why not 3? Because I feel there is no way we will prepare the statement of profits or loss without preparing closing inventory. I hope I'm right, sir.
Very, very much right.
Because it will be better for us to prepare.
Question number 3 is more detailed.
All encompassing.
Yes. Than question number 2. If I solve question number 3, you can use that question number 3 to go and solve question number 2.
Yes, sir.
That is the reason why I said, let me look at question number 3 first, because I will need to prepare the financial statement for you too under that part.
Okay. Before the statement of profits, you will have prepared closing inventory, sir.
I will need to determine my closing inventory first as part of my working load.
Exactly, sir. Yes, sir. So yes. I don't know if the class will go
I think number 3 is that's better.
All right.
Okay. Now let's look at question number 3. On 1st of January, a company had an opening inventory of 100 units, which cost 15 naira. Let's make it 15 naira. That should be an error here. It should be 500, not 15 naira. It's 500. 500 naira each. During the month, it makes the following purchases. April 5, we have 350 units at 610 naira each. On January 14, 550 units at 710 units.
July.
At 750. Yes, July 14 at 710 units. October 22, we have 250 units at
At 810.
at what?
810 naira.
810 naira.
Naira each.
Yes. They now said during the month,
Yes,
during the period, it sold 1,000 units.
during the month.
During the period, it sold 1,000 units as follows.
1,000 units.
We have May 9, 250 units at 750 naira. We have July 25, 250 units at 850 naira. November 23rd, we have 250 units at 960 naira. December 12, we have 250 units at 1,200. That is what they end up selling. Now said, if the cost of carriage inward was 120,000, wages 50,000, rent and electricity are 120,000, 35,000 respectively. Required, prepare statement of profit or loss for the period using first in, first out, simple average method, weighted average method. But in the process, I will also do LIFO here. Is that clear?
Yes.
Hello? Let me
Yes, sir.
lastly, cost out method. So that's the reason why didn't want me to do question one. I will do everything across this. You can now use the idea here to go and solve the other one on your own. You can be able to solve it. Then in the exam, if you see such situation, that will not be any issue for you. Okay, are we good to go?
Yes, sir.
Yeah.
Yes, sir.
Okay.
Hey, Ella. Sit down. Yeah. That. Ẹ má yẹ kí ní wọlé. Má jáde.
Are you with me?
Oh.
Are you all with me?
Hello, yes, sir.
Yeah, yes,
Okay.
sir.
Can we see the board?
No, sir.
Yes, sir.
Okay.
I can see it. Oh,
You can the working board, not the question.
okay.
I
Yeah,
can't
we
see
can't
the
see the
working
working
board.
sheet. Yeah.
Okay. Are you all with me?
Yes,
Yes,
sir.
sir.
Let me share the board with you. Can you see the board now?
Yes, sir.
Okay. I can't just prepare financial statements, but that is what they want me to prepare. But this will be my working notes. The inventory valuation is going to be my working notes. Is it clear? Are you with me? Working notes. Working notes. Do you see the working notes? Are you with me? Hello?
Yes, sir.
Hello?
Can see.
Now, this is the working notes.
Hello,
The
sir.
statement,
Okay.
hello, I can hear you.
All right, sir.
Now, what they want you to prepare is what?
Yes, sir.
Statement of profit or loss. For the period ended. This is what they want you to prepare. But we cannot prepare this without having our closing what? Inventory.
Inventory. Okay.
Is it clear?
Yes, sir.
Is it clear? Now,
Yes, sir.
instead of me now putting this working notes here, I want to do the working note in a separate sheet. Why I will do the financial report in another word, separate sheet, in order for the system to tally. Is that clear?
Yes, sir.
Is that clear? Okay.
Yes, sir.
Okay.
Hello?
I can hear you. You are free.
Okay, so I want to ask this question now. Now, so for the purpose of exam, where can we have a working notes?
Where can you watch?
Or where should we put our working notes for the purpose of exam?
I think I'm using Word.
Okay.
It's because of the multiplication. The working note will be under the question they ask you. The question will come first, the working note will be under.
Okay.
Are you all with me now?
Yes.
Yes, sir.
Now, looking at it this way, this is my statement of financial position. Statement of profit or loss.
Profit or loss for the period.
Exactly, for the period.
Yes, sir.
Now, I will have what we call the Naira value here.
Okay.
Okay. Okay, we have set up this. Here we need what? Sales. Is that not so?
Yes, sir.
Yes.
Yes, sir.
Then the next one after sales is what we call cost of sales. What make up your cost of sales? We have
Purchases.
we have opening inventory, we have purchases, are we together?
Yes,
Yes,
sir.
sir.
Then we have carriage in what? Then we have closing inventory. In the process, I will be adding some things to it, but this is what we need before we now come to what point where we have expenses. Is that clear?
Yes, sir.
This is what we need to prepare. But there's no way we can achieve all this without taking the necessary steps. But to now make it more reasonable and more what sensible, I can create what additional column for addition of things. Do you understand? Not to
Yes.
waste our time. Okay. Now, this one is just mainly analysis. It's not, there is no need for you inputting anything. Is it clear? Now, I can now indicate here what is the price and this and that. But before we can continue, we need to go and look at what the workings, as we have made mention of. Working notes. Now, what is the first day of our transaction?
5th April. Abi? Sorry. Yeah.
Okay, let's go. Okay, do you still have it with you? You have it. You can open it on your. If you are using
Yes,
your
sir.
phone to be calling it,
Okay.
it will be very easy
So
for me.
on January, we have our opening inventory to be 100 units.
Okay, on January we have our opening inventory.
1st of
January
January.
what? 1st of January.
Yes, sir.
January 1. Opening inventory, Abi?
Yes, sir.
We don't have departments. Exactly. We move away. How many? What is our quantity? It is not what we received, but what we have in the store. It's going to be on that balance. How many units? 100. Have you?
Yes, sir. 100 units.
Will come in. Make it more reasonable. This one will be in units. This will be in naira. Shall we?
Yes, sir.
What do we say we have?
We have 100 units,
At what value?
500 naira each.
₦500 be
Yes, sir, each.
each. We now say that for you to get
500.
the value, you will say quantity times price.
Okay. That's 50,000.
Times price. That is what 50,000. Is it clear? Is
Yes,
it
sir.
clear? Okay.
Yes, sir.
Then from there, what else do we also have?
We have during the month,
During the month, what happened?
we have April 5.
We have April 5, Abi.
Yes, sir, 350 units.
April 5. Now,
Yes, sir.
you now need to watch for those dates. Is that clear? You need to consider them serially, whether issue, the one for sales, or the one for what? Purchases. Do you understand?
Okay.
The one that comes first is what you are going to call
Okay.
first, not the
Okay.
way they have arranged them. You use their date to call them. Is it
Yes,
clear?
sir.
Now,
Yes,
the
I
next
Yes, sir.
one after January, that is
is
next, according
is
to
it
date. Which one? April, Abi?
April? Yes, sir.
April. April what?
April 5.
April 5. What do we do there? We purchase, Abi?
Yes, I purchase this.
Purchase this.
Yes.
How many units do we purchase?
350 units.
350, Abi?
Yes,
Yes,
sir.
sir.
At what price?
610.
610.
610 naira. What will be the value? 350
210.
times 610.
213, 500.
Is it clear?
Yes,
Yes,
sir.
sir.
Now, that is not the end there. You will now
Yes.
take the amount you have here and add it to what you have. Take your balance as your store.
Yes.
Take this
Okay.
as where you received. You will now come
Okay.
here and add the quantity together, the old one and the new one. 100 plus
Okay. 100
350.
plus. Okay.
That's 450.
Yes, sir.
Now, you're supposed to add the price, but because you're having two prices together, you will leave your price place blank.
Okay.
Is it clear? You are having how many prices? Two. Because the old price is 500. The second one is what?
610.
610. As a result of that, that price place is going to be blank, but you'll be monitoring the what? The movement.
Okay.
Is it clear?
Yes,
Is it
sir.
clear? Then you will add the value together. What will be the value? 50,000 plus 213,500. Is it clear?
That would be 263,500.
500, correct. What's the second transaction? I mean, the next transaction according to date.
July
Hello, sir.
14.
Yes.
Sorry, I didn't get that part. Why are we not adding the price?
You can't add price now. You can't add your price. Why will you add your price together? You bought two things at different. You bought two things that are similar but at different prices. You can add the quantity, you can add the value together to know the total cost of what you have purchased. But you cannot add what that you have what price of 500, plus what? Price of 610. Are you now saying that you want to be selling at rate of 110? No. But you need to monitor the quantity, the old price and the new price. Anytime you are selling the old one, you will use the old price. Anytime you are selling the what? The new quantity, you are going to use the new price. But you cannot add the new price together because they are not what? The same thing. Where they are the same thing, you repeat it, you report it. But where they are not the same thing, you leave the place blank. Simply because you have two different prices. You are having two different prices. That is why you cannot add it. And that place must be blank.
Okay.
Hello?
Okay, so is it that in the case we are having the same prices, we'll add them together?
You will not add, you repeat that price. Let's assume that we have 500 here, we have 500 here, and we report 500 here. Because at that particular point in time, if I should divide by value, the value of the goods divided by, are you with me? Divided by quantity. See the price you are going to get. Is it similar to the two prices? No.
Okay. Hello.
Hello, I can hear
So
you.
the price does not change, sir.
What do you say?
I said, so the price does not change.
The price does. You leave the price like that. That place is going to be blank. The old is for old. The new is for new.
Hello. Okay. So to put in my home words now. So now for the in the balance column, for the quantity, we have a mixture of two different types of two different
we have the addition of the old and the addition of the new.
And then they don't have the same prices. So
the price.
So 350 pieces out of the 450 is cost 610 naira, and then 100 units out of the 450 cost 500 naira.
Yes, you are right. That's the addition of the two, which gives us the value. Any other question before moving to the next one? Hello? Hello?
Hi, sir.
Are we good to go?
Yes, sir.
What's the next one? The next date? What's the next date? The next date should be
We
May.
have May, sir. May, yes, sir.
May 9, Abby?
Yes,
Yes, sir.
For May 9, what do we do? Do we issue?
Yes.
What happened there? What happened there? What they say?
It was sold during the period. It sold
Yes,
10,000 units, so it has to be issued.
What is? How many do they issue out?
250 units.
350. Is it 250 or 350?
250, sir.
250. Now,
At 7
between what method are you using? What method are you using?
FIFO.
We are using FIFO. Who is talking under there? Please, you can mute yourself, please. Now, looking at it, you have 50, 250. And the whole quantity you have in-house is what? 100. And what stock valuation method are you using? We are using first in, first out. Is that clear? That first thing you are going to bring out is the old one, which is what? 100 units. That is the first one. 100 will be here. The second one The balance of that 100 to make it 250 is how much?
150.
150. Now, the 100 is going to be at what? At what price? 500. The second one will be at what? 610. Is it clear?
It's not though.
No, it's not 610.
The
Yeah.
second price, look at the price of the, you have equal out the 100 you have. First in, first out.
Mm-hmm.
The opening balance of 100 has gone out, which is this. At rate of
Yes.
how much? 500. The next stock you have is the one of that 350. At what rate do you get that one? At what price?
610.
610. That is the amount you are issuing it out. It's not that you are selling. The rate you are taking it out from your store to where they are going to sell. That is what we are looking at, not the selling price that they gave you there.
Okay.
Is it
Hello,
clear?
sir.
I can hear
Yes,
you. You can speak up.
So are you saying that this 100 units that we have as opening inventory is only
That is the
going to
opening
affect
inventory.
our sales? Yeah, I'm saying it's only going to affect our sales record and not the purchasing.
We are valuing stock now. This is stock valuation. We are not selling now. We are valuing the stock the way we got them. The first one we received is 100. That is the one we met in the store as at the beginning of the year.
Yeah.
That one is going out. At what rate are we moving it out?
500 naira.
You have your sales unit, you have your warehouse. In the store, the storekeeper is going to report it out at what rate? At the same cost that they have bought those things in. That is the rate
Okay.
is going to report. At the
Okay.
sales point, they will now sell at the selling price.
Okay.
Is it clear now?
Yes.
The storekeeper is monitoring both the quantity and the price at which those things came into the warehouse. To know the value of the closing stock at the end of that period. When we get to where we wanted to sell, we now make use of the selling price given to us. Proper, is it cleared or is not cleared?
It is, sir. Continue.
If you are saying it is, so for continue, you are not cleared.
So it is clear. I'm clear on it. Just continue.
Now, we can determine the quantity of the total value of this, which is what? You can see that it is 250. You are what? Sold out. We close it. We hold it. Then we also need to determine the value. 100 times 500.
50.
Can you see it is 50,000?
Yes.
The second item you receive has been sold. Is that not so? At what trade did you sell that? At 610.
10.
This is the rate you move it out. Then what is the value at this junction? This will give you
91,500. Okay.
91,500. The total quantity there will be what? 141,500. Is that not so?
Yes, sir.
Now, we are not going back to the store.
Hello, sir.
Yes.
Sorry, sir. So basically, I just want to get this straight. If our opening inventory wasn't 100, let's assume it was 300. So these sales of 250, it is still going to be affected.
If you have up to that amount, that is what you are going to sell, and the balance will continue.
Mm.
If you have 350, you want to sell 250, you will sell 250 out of the 350 you have as your opening balance. Then you have a balance of what? Of 100.
Okay, sir. Thank you.
Now, we now need to report the state of our what? Closing balance as at now, when we have what? Moved out part of the stock. That is, out of 450, you move out what? 250. What is the balance?
200.
200. Then we move to the next what? Value. This one, the value minus what? The value of what you have moved out. What do you have? 122. Is that not so?
Yeah.
Yes, sir.
Now, if you now test the value and the price, test it now. You must have the same what? Value with your new what? Stock. You must have the same price with your new stock because you have sold all the what? Old ones. What you have now is what? New ones. Is that not so? Let's test it, whether possible we can get the same answer. You cannot say that the value divided by the what? By the quantity. What do we have? System. We can report it in that scenario. Where you don't have two prices, you can report your price. But where you have two prices, you can't report what? The price. Because it's going to be confusing. Is it clear?
No, sir.
What's the next one?
It's not clear, sir. That 200
not clear.
naira you brought down is what is not clear to me, sir.
Okay. And before we issue out 250, Abi, we have 450 what units.
Yes,
Is that
sir.
not so? Out
Yes,
of 450 units, we issue out what? 250. What is the balance you have in the store?
200.
200. That's what we did. We minus 250 from 450. You have 200.
Okay. Then we now
Then the
use
value. We also minus what? 141,500 from 263,500. We have what? 122,000.
Okay.
Now, to now get the price at that level, we divide the value by quantity. We have the same price of the new stock we received, which means we only have the new stock. We don't have any old stock anymore.
Okay.
Is it clear?
Okay.
Is it clear?
So our new stock will now be that 200 multiplied by 16.
Yes. If you multiply 200 by 610, you will get that figure. You can
That's
test
what I'm
it.
saying. I said from the balance now. That is our new stock. That's our new.
The new stock we have now and the new value of the stock we have. And the price of that new stock is 610.
That new stock. Okay, sir. Bless you.
What's the next one?
The next one is July 14.
July 14.
Yes, sir.
Now, July 14. What happened in July 14?
Purchases was carried out.
We purchased, Abi?
Yes, sir.
Purchases. How much do we purchase?
550 units.
550 units. At what price?
At 850. Sorry.
At what?
710. 710.
710. What would be the value? 550 times 710. What would we have? 390,500. Is it clear?
Yes.
You will now add the quantity and the value together. You will have the quantity. Now, quantity against quantity, value against value. We now say that previously we have what? Balance of 200 units of stock in the warehouse. We bought another 550. What do we now have as the total?
750.
750.
750. Straight away. What about the value? We have 122,000 plus the new value of the stock we have purchased. We have what? 512,500.
Okay.
Then our price will be blank because we have what? The former one was what? 610. The former balance, we have 610 price. And the new price is 710. That place is going to be blank. Since we're having two different prices. Where the price is the same, we repeat it. Where they are not the same, we leave the place blank. Is it clear?
Yes, sir.
The next one is what?
July 25.
July 25.
July. Okay, the first one you call for me is June, Abi. Was it June?
July
14.
No, sir. July 14. We have no June.
We have done June.
We don't have
don't have June, sir.
Okay, the next one is now what?
July 25.
Okay, July. July 25. Do we purchase or issue?
It was
Sales, Abi?
Yes, sales.
Is it sales?
Sales.
Yes, issue, sir.
Okay. How much do we issue out?
850.
250. Now,
250
what
units
you
at
have,
850. Okay.
fine. The quantity you have before the new stock,
Yes, sir.
start to be what? Is it up to 250?
200.
Yes.
Do you
It's
look
not
at it very well? Oh. Look at it very well. Oh. Is it up to 250 before you bought in the new one?
No, sir.
No,
It's
sir.
200.
It was 200.
200. That is what you are going to repeat first. 200.
Okay.
Is it clear?
Yes, sir.
Is it clear? The balance is with what? It's going to be what? 50. Abi?
Yes.
Making total of what? 250.
Okay.
Is that not so?
Yes, sir.
Yes, sir.
The one of 200, that 200 unit is at what price?
610.
610. The one of that 15 naira is going to be at what price?
At 710.
710. Thank you very much. I love you guys. Then we now have 200 times 610. Can you see it's the same figure you have there? It's reporting now.
It's 12,000. Yes, sir. Hello.
Okay. Then the one of that 15 naira will now be 15 naira times 710. What do we have? We have what?
35,500.
We now add it together.
Yes.
What's the addition? The addition is what? 157,500. We now come here. Let's go to the store and reduce the unit. We now have from 750 minus what? 250. We have 500. Abi?
Yes, sir.
Then from 512,500 minus 157,500. What do we have? 355,000. Is that not so? We now say that let's confirm to know what is the price of what we have in the store. For the confirmation, we go to the price position and say that value divided by quantity. We have 710, which means what we have in the store is only the new stock. Is it clear?
Yes,
Yes,
sir.
sir.
Sorry, sir. Sorry to take you back.
Okay.
That sales on July 25 was 250 units, right?
Yes.
So, okay, how come we looked at the 200 value, not the 750 that was last one? Just
What
to
are we
understand.
using? We are using first in, first out. You must not
First
first
out.
issue out the whole stock before you can issue the new stock.
Okay.
Okay.
50.
First in, first out. The first arrival must go out first before the new arrival.
Okay.
Is it clear?
And the first arrival is the 200 at
200
660.
at 610.
Okay.
Okay. The next one.
October.
October. October what?
October 22.
22. What do we do?
Purchase, sir.
We purchase, Abi.
Yes, sir.
Yes, sir.
How much quantity do we purchase?
250 units.
We purchase 250.
250
Yes,
units.
sir.
Yes, sir.
250, Abi.
Yes,
Yes,
sir.
sir.
250 unit. At what price?
810.
810. What is the value? Is it clear? Is it clear?
202,500. Yes, sir. 202,500.
Yes, sir.
Now, we will now add that 250 to 500 in the store.
That's
87.
Plus this. That's 750, Abi.
Yes, sir.
Yes, sir.
Then the value will now be 355,000 plus 202,500. That is 557,500. Is it clear?
500.
We are not going to report price simply because we have two prices.
Two different prices.
Different
Yes.
prices.
Okay.
What's the next one?
We have November.
November.
23rd.
November
23rd.
Purchase or issue?
Issued.
Okay. How much do we issue out?
250, sir.
250. If we issue out 250, this 250 we are issuing out, we are going to issue that from where?
From
From
5.
Old stock from
500.
500. Yes. 250, 710. Straight away. 710. Then the value will be Can you see it?
Yes, sir.
Now, we now come here. 750 minus 250. That's 500, Abi?
Yes, sir. We have
Okay.
250.
Then the value will be this minus this. Is it clear?
Yes,
now,
sir.
what I want to confirm from your hand, before we always divide. If you divide, you will now see that you can't get 810, you can't get 710 because you still have two different prices of goods in your store. You have the one of 710, which is 250, and the one of the new one that is 810, making total of what? 500 in the store. Look at what I'm saying. Let's test it. this divided by the quantity. Can you see what you have? Is that, do you see it as 710 or do you see it as 10? No, because they are two different prices. In that scenario, you will not report anything here. You leave it blank. Is it clear?
Yes.
The next one is what?
December 12th. Oh, have I
November.
reported?
What do you say?
December 12th, sir. December 12th.
December 12th. What do we do?
So,
We
We issue Abi.
yes, sir.
How much?
250 units.
250 units. At
At
what rate?
1,200.
1,200.
Which means at what's your price? Which price are you still using? You are using 710. 710. Is it clear? Do you understand it? Yes. Look at it
So,
now. Before we
I
brought,
understand
wait, stop. Before we brought
okay.
in the new one, we have 500. We had 500. Out of that 500, we issue out 250. The
Yes.
second 750 is also, the second 250 is also coming out from the same 500 at rate of what, 710.
Yeah.
The balance you will now be having now will now be for the new stock.
Okay. Which is 700.
Yes. Which is what, 200. Let's look at it. You have 250 now because we are taking out from 500 minus 250. We have 250. Now, what is the value? 380 minus 7. Is it clear? And when you test it, you have this divided by this. You have 810. Simply means it is only your October stock you have not touched. Look at it here. The issue of the last stock, the last one we had was 500 in July.
Yes.
After that July, we bought in another one, which had to be 250 at rate of 810. We have 750.
Mm-hmm.
And in November, you issue out 250. In December, you issue out 250. And what are you using? You are using first in, first out. Before of us said you owe 500, before you can sell 250. Is it clear? Look at it yourself now. You have 500 here. See, 500 is here. You bought another one in October. You have 750. And what you are using is first in, first out. You can't sell the new one. You must sell the old one first.
Before the new one.
And in November, you issue out 250. You still have 500. What is the combination of your 500? The one of 250 at rate of 800 and another 250 at rate of 750. That is the one of that, 710. The one of that 250, the remaining 250 at rate of 710 must go out before you can issue out the one of 250 at rate of 810.
Okay.
You need to take your time to study it. We have done this one now. I can go ahead there and prepare my
Profit or loss.
and
Statement of
prepare
profit or loss.
statement of my profit or loss.
Loss.
Mhm. And most
What
of you
about
are audit.
simple?
What do you say?
What about the simple average method? Are we preparing statement of profit or loss for each of the method?
All the method, you are going to do everything.
I mean, each method with statement of profit or loss.
Yes, you will do your stock valuation for all the method, and you now prepare the statement of profit or loss. You will prepare your stock valuation for each of the methods. You will now use your results to prepare statement of what? Profit or loss.
For the period.
Yes.
Okay.
Now, looking at the first one, what will be our sales here? If I want to simplify it, not to waste my time, I will just go there and add, because we have what? The sales. Look at, maybe you can see sales now. Where you see sales, where you see purchases, you can see them. Abi? Hello? Hello?
Yes.
Yes, sir.
Now,
Yes, sir.
now, to simplify it, for you to have a better understanding of what we have done, I will not bother, I will not look at it as being stressful. I will analyze it. Not easy. This online. Now, wow. Okay. Now, see, look at it here. See my quantity here. Quantity, see price. Are you with me? To make it more easier, that's why I'm doing this. On a good day, I don't supposed to do it. I just went to pick the figure and get out. Exactly, but I won't do that. To indicate. First one is, the first sales took place in what date?
May 5, sir.
What date? What date? Date?
May 5. May 5.
May 5, Abi?
Yes, sir.
May 5 or April 5? What are you talking about? I don't understand.
Sales, not purchase sales. Sales.
It was on the 5th of May.
Look at it. Your
It is
first
May.
sales was in what? May 9.
May 9. Yes, sir.
Oh, sorry, sir.
May 9. Now, what quantity did you sell? 250. At what is now your selling price now?
750.
What do you say?
750.
Which
They
selling
showed you
price?
selling price that they gave you now. The one they gave you.
Okay, the new one now.
No, the one they gave us from the question.
The one they gave
In
us
the
for
question, selling price,
9.
750
Okay,
naira.
for May 9, it's 750, sir.
750 is here.
Yeah.
I will now determine my sales here that 250 times 750. That is my sales in that period.
187,500.
Is it clear now?
Yes, sir.
Yes, sir.
What's the second one?
We have July 25.
July what?
25.
Yes, sir.
July
25.
25. How many units? 250, Abi?
850.
Yes, sir. No, 250
250 at what rate?
850.
That's what I'm
850.
saying. I said 250 at 850.
Then we now have 250 times 850.
212
That is your
500.
sales. Is that your sales?
Yes, sir.
Yes, sir.
The next one,
November 23rd.
November, Abi?
Yes, sir.
November 23rd. How many units? 250, Abi?
250. Yes, sir.
At
250
what
at
rate?
960.
950. 60, 960.
960.
Is it this? 960. Is it
Yes,
correct?
sir. Yes,
Now,
sir.
what will now be the
240.
time?
240,000.
Which one was the next one?
December 12.
December 12.
12.
How many units? 250, Abi?
Yes, sir.
At
At
what rate?
1,200.
Okay, 1,200.
200. 300,000.
This is equals to 250 times 1,200, 300,000. We now
Yes.
add everything together to know your sales value. Is it clear?
It is clear,
Yes,
sir.
sir.
Yes, sir.
This is your total sales for the period. 940,000. Now, we now come here. What is our opening inventory? We have 100. Abi? Opening inventories at the beginning was 100. Is that
100.
also?
Yes, sir.
What is the cost of that one?
500 naira.
500 naira.
Naira.
Put it here, 500 naira. Then the value will be what? 100 times 500. Is it clear?
Yes, sir.
Now let's look at what you have purchased, the quantity purchased. Now, for the purchases, what is our purchases? Unit we purchased in January or which day?
April 5 now. Abi?
April.
Yeah. April 5.
April 5.
Yes, sir.
How many units do we purchase?
350
Abi?
units.
At what price?
610.
610. Is it clear?
Yes, sir. 213 500.
This times this. Abi?
Yes, sir.
But it seems we have this figure already. Why are we stressing ourselves? Can't we pick the figure straight? But for understanding, let's go. Let's go. The next date is what?
The next one is July. Sorry.
July.
The next
July
one is
what?
July 14.
July 14.
Yes, sir.
July 14. How many units?
550 units.
550 units. At what price?
At 710 naira.
710. Then that is equals to what?
390 500.
390 500. The next one?
October 22nd.
October 22nd, Abi?
Yes, sir.
What do we have?
We have 250 units at 810 naira.
250 units. At what?
At 810 naira.
Which is equals to
202 500.
202 500. Is it clear? Do we have any other one?
No, sir.
Huh?
Yeah, we
That's
still
all.
have no, sir. No, sir. We don't have any other
Okay.
one.
Now,
No, sir. We don't have any other
okay.
one.
Now, we now add
No, that's all.
all this together. What we have will now be cost of what? This one will be cost of goods available. This is what? Cost of goods available for
So,
sale.
did we include the opening inventory?
Yes. Okay. It seems you have carriage inward now.
Yes.
Yes.
Okay.
It's still done.
Now, okay.
So,
Now, if you have carriage inward, in case of next time you have carriage inward, you have what we call labor wages. All those ones, they are what? Direct expenses. They must be recognized. We now say carriage inward now. Carriage inward. How much is your carriage inward?
120,000
120,000
naira.
naira, yes. We now add, if you add everything together now, it gives us what? What do we have? Do you get it? Is it clear?
It's clear,
it
sir.
is that.
Hello?
Hi, sir.
It's clear,
We
sir.
added opening inventory plus our purchases plus carriage inward. We have our cost of
That's
goods
from this
available for sales. We now less our closing inventory. Closing inventory. How much is our closing inventory? The one we calculated.
Okay.
Let's go to the workings.
Okay.
202,500. We pick it. We less it from here. Is it clear?
Yes, sir.
When we less it, we are going to get what? We get this one. This is cost of goods sold. Cost of goods sold. Is it clear?
Yes.
Yes, sir.
We now less cost of goods sold from your sales. Then what we are going to get when we less this one from this minus this, what we have here is what? Gross profit. Is it clear?
Yes, sir.
Yes, sir.
Yes, sir.
Then we now take into consideration expenses. What are the expenses we have?
We have wages. We have
What
wages.
What do you call? What is
Wages.
it?
We have electricity.
We have electricity.
I can't hear you clearly. Let me check it myself.
We have
Do you say
wages.
we have
We have
wages?
rent and
Then
electricity.
I said it. I don't know. I said wages should be included in your cost. You should have given me that wages. Wages should be included in your cost. Is it clear? Is it clear? Here, where you have this carriage and others, you are meant to include your wages. Is it clear?
Okay.
Hello, wages is direct expenses. Those who help you to pack those goods, into the
Yeah.
store is part of your cost. Is it clear? Not expenses,
Okay, sir.
wages. How much is that wages?
50,000 naira.
50,000. Then this has gone up. Automatically, your cost of goods available for sales is what? 1,026,500.
1,026,000.
Our cost of goods sold will now be 824,000. Our gross profit is now 116,000. Then what are the expenses we have now?
We have rent to be
Electricity, yeah.
120,000.
Rent how much?
120,000.
120,000.
Electricity 25,000 naira.
Electricity
25,000 naira.
25,000. Is that all?
Yes, sir.
Addition of this will give us what? We have 145,000. Is it clear? We will now less it from our gross profit. What do we have? Is it profit or loss?
Loss.
Loss of how much?
29,000.
We have net loss.
Loss, sir.
Yes. That is what is expected of you by the examiner. Is it clear?
Yes, sir. That is for first in, first out, sir.
First in, first out.
Ha. First out. Oh.
It's a theory question now. What do you expect? What did you expect?
That's why people are running away. I said that's why people are running away from my canoe.
And that is where we were making our money. These are the things we are doing to make money presently. We go to the field, we will do the stock taking, come up with what? Something for them. Try to advise them, give them advice. We collect money. That is what we are eating.
Okay.
You can do better than what we are doing. Yes.
It's not easy, sir.
If it is easy, the money there will not be reasonable.
You can hear us saying, it's much.
I can hear you saying, especially Tope. Saying,
it's not only Tope. It's not only Tope. It's all of us.
You know what? By the time you practice it yourself, it's the most simplest you can be expecting in an exam. If you don't practice it yourself, you discover it is hard. Take your time, go through it on your own, do it again. Immediately you can get it right. Forget about it. When I was writing my ATS 2, and they gave us something like this, we did even your own error now is very easy. During our own time, there's what we call consignment account. There's what we call royalty account. There's what we call what do you call it? Investment account. There's what we call what do you call it? Liquidation. All those ones, they are not there in being. It's only valuation. What they call it now? Standard. They are testing now. All those accounts, you will go and learn them on your own later.
Okay.
Except those who pass through ATS. If you don't pass through ATS, those accounts you can't know them. Except you have learned it in university. For gone of our days, all those things you need to know them because those areas will be tested in an exam. But now, all these ones, Immediately we saw this one an exam. We always give glory to God. Thank God that this one came out. Because they are very direct. But if you see consignment, you see royalty, you will work before you get to where you are going. There's what they even call venture, joint venture. That one is advanced partnership. It is not partnership business, but it's advanced partnership business.
Joint
Where
venture.
there's no agreement, no nothing, but there is a way you are going to share your profit, and your account must balance. All those ones, you don't have them anymore in the system.
Mutual
This one, if you take your time to go through them, I'm not going to finish everything this night. Don't assume that I'm going to finish everything this night, because I know immediately you can get it, the technicality there, you don't have problem. You get it. But this one, take your time to go and go through this one. Coming up next week, I will look at the other method. Since we have the lay down, we have foundation already on it. It will be very straightforward. All what I'm explaining today, I will not explain them next week, because you are familiar yourself with those ones. Exactly. We now need to look into what we call weighted and simple average before we can now look into other areas. I will not stress it too much to make you to be on the same page. You take your time to go through this one. Take your time to go through this one. You get it? Look at the workings. Look at the solution. Take your time to solve it on your own. If you have any challenges, you can call me during the day. I will attend to you, no problem. You get it? Then I will now look at what we call weighted average next class and simple average. Thank you very much.
We are grateful.
Yes.
Thank you, sir.
Please, are you going to send the recording to us?
They will send you there. You can go to YouTube. You can see everything there. Everything is there.
Yes.
From beginning to the end.
This particular
but
one.
I will send it. Yes, I will send this one. I will send it. Okay. Have a wonderful night.